The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. A quiet day in the market as some traders celebrate the Jewish New Year, Rosh Hashanah. Very light volume in the market today, tracking about 30% lighter than what we saw Friday, but an orderly decline, a little bit of profit taking for the major averages. Before we get into what the market's doing today, let me remind you that if you want to give me a call, please do so at 877-927-6648, toll free. Give me a call if you have a question about a stock or the market in general. Breakout now airs 5 days a week on TFNN from 3 to 4 Eastern. If you can't listen live, no worries. You can head over to iTunes, pick up my show as a podcast. And don't forget, you can listen to all TFNN programming on your smartphone. Just open your smartphone browser, type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. And going to be looking at charts like I always do on my show. If you want to look at those charts live right along with me, you can do that on Tiger TV on the homepage of TFNN.com, Channel 1. The show is carried live, and it is archived on Channel 13. And Tiger TV is also viewable on your smartphone as well. All right, checking in on the S&P 500. Very quiet day of trading today. Again, volume tracking much lighter than what we saw on Friday. Volume Friday on the New York Stock Exchange above average at 893 million shares. We're tracking about 30% lighter than that today. S&P 500 right now down about 6 points, 0.4% to 1459. The NASDAQ Composite falling pretty much by the same amount here. NASDAQ Composite down close to 12 points, 0.4% to 3172. NASDAQ volume, same thing, tracking about 30% lighter than what we saw Friday. Friday's volume on the NASDAQ was also above average, 1.96 billion, almost 2 billion shares. So indices holding gains nicely here. I wanted to put up a chart of the NASDAQ Composite here with the 10-day, 20-day, and 50-day moving average. These are three kind of short-term support levels for the tech index. The 10-day moving average for the NASDAQ Composite right now at 3125. So it's a little less than 50 points above that support level. Then next you've got the 20-day moving average at 3097, and the 50-day all the way down at 3009. So NASDAQ remains in a strong uptrend here. Still has three different support levels, still holding nicely above that, and same with the S&P 500 for that matter, still holding above the 10-day, 20-day, and 50-day moving average. 877-927-6648. Let's go to our first call of the day. We'll talk to Gary, Colorado Springs. How you doing today, Gary? Gary, are you there?
I am here. Can you hear me?
I can hear you now. How you doing today?
Excellent. You mentioned a stock the other day, RP.
Real Page, correct?
Yeah. And I was kind of researching that a little bit, and I was noticing the short interest on that is very high, and I've never really heard you comment about what you thought about these high short interest.
Yeah, short interest is anytime if I do add a stock to the Ultimate Growth Stocks model portfolio, I do want to know what the short interest is, and you're right. Real short interest in Real Page is actually very, very high, and it just increased about 10% from the prior month or so. It's a small cap stock, 1.8 billion. But what you have here is a company. What I'll say about high short interest, I really don't pay that much attention to short interest if you're dealing with a stock that's got pretty good fund sponsorship, and more importantly than that, has got great fundamentals. And I would say that fundamentals at RealPage, despite the fact that it's a small cap stock, are pretty darn strong. When I talked about the stock recently, I talked about exceptional top line growth in recent quarters. I mean, this is a company that is executing. They're selling a lot of product, and their earnings this year are supposed to be up 33% from 2011, and then in 2013 they're supposed to be up 33% as well. So you do have decent technicals here, decent fundamentals. I don't own the stock yet. I'm just watching it because they're in a niche market. They seem to be well positioned for growth. And it's still holding above its 50-day moving average here. But, short interest is definitely something you want to pay attention to. But I can tell you I've had plenty of big winners in the portfolio, Gary, where, stocks that many people would think short interest was very, very high. So, a lot of fundamental guys like to short a stock because it just keeps going up and up and up and up, and they don't believe in the business, and they tend to not pay attention to the fact that growth prospects are actually very, very good, and that they end up having to cover, and you get this big short squeeze. So high short interest doesn't necessarily mean a stock is bad.
Yeah, it's the reason I was interested is I was just researching it a little bit over the weekend, and I noticed that it's right at the place that it broke out today.
Exactly. Yeah, exactly. So RealPage, and that's a pretty astute observation. RealPage broke out, had a heavy volume move. This was back in early August, I believe. It broke out over $23 a share. And, anytime a stock breaks out in a positive market environment, it's not uncommon for it to revisit the swing point. And, RealPage right now at 24.37, it's actually still holding just above the last buying area, just over 23. And it is firming up at its 50-day moving average, like you said. Now, what is a bit concerning at this point is that on Friday, you did have a precipitous decline in the stock, and volume was very, very heavy. So from here, let's watch and see if it can hold its 50-day moving average, but I want to see some upside volume here, some volume expansion if the stock does truly bounce off this line. If it keeps moving higher in light volume, that breaks a pretty basic volume rule where you've got heavy volume on the downside followed up by weak volume to the upside. You still want to, not touch it, wait for kind of renewed signs of accumulation in the stock. And I'm not seeing it yet. But, still an interesting company that I think is worthwhile, keeping an eye on. I think it would be a pretty aggressive buy if you're buying like right now or within the next couple of days in anticipation of support at the 50-day moving average. I still think you're a little bit early just because today's a real low volume day for the market. You're seeing decent volume in RealPage today, but it's probably going to come in a lot lower than that heavy volume decline we saw Friday.
Yeah, the concern was it didn't move with the market. Sort of moved the other way. And then the other thing is, if you look at the 2-hour, 20-day, there is somebody selling that thing. You can see them hitting it.
Absolutely. Absolutely. There were actually some sellers in there on Thursday, too, when it hit an intraday high of $26.99. There wasn't a big explosion of volume, but it was slightly above average. RealPage normally trades about 325,000 shares a day. And on Thursday, it traded 412,000, so slightly above average. But then on Friday, there were definitely some big sellers in that stock, 1.6 million. So that's a sign of big selling. The story hasn't fully played out here. This stock has positives and negatives, and you always want to weigh the positives next to the negatives. A potential negative is high short interest. It's also a small cap stock, definitely more speculative, not as liquid. But you do have a growth story going on here. And you also, it's a high multiple stock as well. So you kind of got to weigh the positives and negatives. And, right now you're probably dealing with, 50-50. You got some positives to pay attention to. You got some negatives to pay attention to as well.
Well, I appreciate it. Good work. Love your picks. Love your show.
All right, Gary. Appreciate it very much. Thank you.
Bye-bye.
All right, Gary. Yeah, that's the thing. Listen, I'm going to talk about a lot of stocks on the show, and I'm not going to have time to go through every last positive and negative. Sometimes I'll just talk about a stock. Hey, listen, fundamentals look pretty good. RealPage is a company that is benefiting from this explosion in rental activity. People aren't so keen on owning houses right now, so they're renting apartments. But RealPage, what they do is they provide software for the rental housing industry, not for apartments, but for the rental housing industry. So not too many people doing that right now. This is a niche market that is really dominated right now by RealPage. And again, growth prospects are pretty bright there. So you always want to weigh the positives and negatives. But high short interest here doesn't necessarily mean that it's poised to go lower, because I've seen several examples of high short interest stocks that continue to defy the market and end up being big market winners. All right, next stop is going to be Nick, Titusville, Florida, wants to talk the XLF. How you doing today, Nick?
Pretty good. Yourself, sir?
I'm doing great.
Good. I got a question on XLF. In the past,
yes, sir.
You've said that was a pretty good buy. How's your feeling that it's not 100% financial stock?
Oh, that doesn't bother me too much. I know top holdings in the Financial Select Sector Spider Fund. I know Berkshire Hathaway's, probably I think the second highest holding there. J.P. Morgan, Citigroup, Bank of America. It's probably the most liquid financial ETF out there. So it has some names in there that are not financial stocks. Do you have any names in mind that you're thinking of, or?
Simon Group.
Simon Group, so the real estate investment group, Simon Property Group.
That's right.
Yeah. No, it's like the biggest weighted stocks in this fund are clearly financial. So if there's a REIT scattered in there, that doesn't bother me. The reason I initiated a position recently in the XLF is that it's just an ETF that is under accumulation, and it's in the process of breaking out of a base. Typically, I own growth stocks in the Ultimate Growth Stocks model portfolio, but I think that the move in financial stocks here in general could be a real one. So instead of owning an individual bank or an individual real estate investment trust or whatever, I just wanted to buy a basket of stocks here. So I still think it looks good and like the price and volume trends in it, and sticking with it for now.
What's it look like for a good time to get in?
Well, this is actually one of my newer initiations in the portfolio. So last week, volume was very, very heavy in the fund on Thursday and Friday. It was actually pretty heavy on Tuesday and Wednesday as well. So it's a fund that's under accumulation. Short answer is that this is it's in buying range right now. And that's why I picked up a little bit last week. So I think that this is. This is an ETF that's perfectly fine here. We're in a market uptrend, and listen, sometimes I know where I'm going to sell it. If it doesn't work out, it doesn't work out, but I bought it last week. I think it has good potential.
I appreciate it, sir.
All right, Nick, thanks a lot.
Thank you, sir.
All right, appreciate it. All right, perfect timing. Thanks to Gary and Nick for getting Breakout Investing off to a good start. 2 good calls, 2 good questions. We're headed into break number 1, coming back for a few more segments here. Listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Wanted to show you all a weekly chart of the Financial Select Sector SPDR ETF. We talked to Nick in Titusville, Florida, before we went to the last break about just a good, solid technical breakout in the XLF last week, and you can see the weekly chart here. Nice prior uptrend. The XLF settles into a base, forms the right side of its base. Now, what I did say here, you are talking about a fund that is up, headed into this week, was up for 8 straight weeks, I think. Let me just see. 1, 2, 3, 4, 5, 6, 7, 8. 8 straight weekly price gains. So from here, wouldn't be surprising to see a little bit of a pullback, and we could be seeing the start of that pullback today with the XLF just down a little bit, down 18 cents, a little about 1% to 16.10. But when you get a technical structure like this, you could get what's called a little handle area form. Could pay a visit down to that last swing point around 16, maybe even a little bit below that. But if this market is as healthy as it appears to be, then you'd expect the selling, the shakeout, to be in low volume, short-lived, and that could pave the way for additional strength in the XLF. So I think my model portfolio right now has about 10 holdings in there, and if you'd like to see what the model portfolio looks like as well as what is on the watch list at this point, you can get a 30-day free trial to Ultimate Growth Stocks right on the homepage of TFNN.com. You can click on the newsletters tab, then click investment newsletters. You'll also see right on the homepage in red letters, try out Ultimate Growth Stocks. So all the information right on the homepage of TFNN.com. Earlier today, economic data, manufacturing activity in the New York region weakened again in September. Not a surprise there, but it did weaken a little more than expected. This is according to the latest reading from the Empire Manufacturing Index. The index decreased to negative 10.4 in September from negative 5.9 in August. In contraction mode, nothing new there, but it was a bigger drop than expected. Analysts were looking for a reading of minus 3. Not that long ago in May, in fact, the index clocked a reading of positive 17.1. So the Empire Manufacturing not looking too hot in recent months. And don't forget, on Thursday, the Federal Reserve Bank of Philadelphia's Manufacturing Index, the Philly Fed, that's going to be out. And it's been in contraction territory for 4 straight months. And unfortunately, another month of contraction is expected. It should come in around negative 4 after a reading of negative 7.1 in August and negative 12.9 in July. So not only is the Fed concerned about this sluggish job market, but it is definitely concerned about sluggish manufacturing activity as well. Tomorrow, housing starts, building permits for August, existing home sales as well. Let's check in on the ITB. This is an ETF that tracks the home builders, iShares Dow Jones U.S. Home Construction Index Fund. Reversal here, definitely a fund that has been under accumulation and definitely a fund that is very extended in price right now. So you should not be buying the ITB up here. You shouldn't have been buying on Friday. You should not have been buying on Thursday or Wednesday last week. It's very extended after a initial breakout over 1630 and then a breakout over 17 here in July. So, I always pound the table on not chasing extended stocks that have run a lot over a short amount of time. ITB looks very extended here. Taking a little bit of a hit today. Volume not overly extreme, but down 2.2% to 1975. Home builders have done very, very well. A little flash crash in oil today, down 2.4% to 96.62. It did finish well off its intraday low of 94.65. There was a 20-minute period today where oil fell about $4 in 20 minutes. There were rumors circulating of a possible strategic petroleum reserve release, putting more oil out on the marketplace. But taking a look at the USO, this is another ETF, the United States Oil Fund, which basically tracks the price of West Texas light intermediate sweet crude. Big, wild intraday price swing here. You see an intraday high of 37.02, a low of 35.23, excuse me. So a high of 37.02, a low of 35.23. It is still trading near its session low, down 3% to 35.74. Gold for December delivery fell $2.10, 0.1%, to close at $1,770.60 an ounce. Check in on the GLD before we head into break here. The GLD is near its session low, down $1.57, 0.9% to 170.23. When we come back, we'll take a look at a weekly chart of this GLD. We'll do that in about 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing, taking a look at a weekly chart of the Spider Gold Trust. Gold under a little bit of pressure today. I mentioned that before we went into the last break. Gold for December delivery down $2.10 today, 0.1%, finished at $17.70.60 an ounce. But the weekly chart of the GLD still looks compelling here. This is another example. The fund headed into this week was working on 4 straight weekly price gains. It's down a little bit today, so we could actually start to see a little handle area form here too, where maybe the GLD corrects down to that, 165, 164, just pulls back modestly in light volume. You get that handle area form in this cup-shaped base, and then you could ultimately get a breakout either in the high point in the handle area here, or maybe it takes out its recent high of 174. The U.S. dollar index up a little bit today. Certainly gold has been benefiting because of the continued weakness in the greenback of the U.S. dollar index right now, trading around 79, up 15 ticks, just a little bit. We'll check in on the U.S. dollar index here. This is as of Friday's close, but boy, it has just been in a world of hurt since mid-July. Basically, as the market has been moving higher, the greenback has sold off. So looks like its four-session losing streak is going to end today, but there's still a little bit of time left. A little bit of bond buying today as well. That sent the yield on the 10-year note down modestly to 1.84%. 30-year bond right at about 3.04% or so. Let's check in on shares of BLMN, Bloomin' Brands. Stock made a nice move today. It wasn't able to hold gains. It hit an intraday high of 1584. It is now trading around 1501. Still up 4.2% on the day. Bloomin' Brands, ticker BLMN, came public last month in August at $11 a share and is performing pretty well. They operate the Outback Steakhouse restaurants, popular casual steak place, also the Bonefish Grill, that's casual seafood, and then upscale eatery Roy's. I think I went to a Roy's in Hawaii, if I'm not mistaken, maybe in Oahu or Maui or somewhere. But Bloomin' Brands actually performing pretty well. New issue doing well. The one thing I don't like about it, though, is, and I've talked about this before, I get a lot of people asking me about charts all the time, and a lot of times I see strong technicals, but then I see kind of questionable, shaky fundamentals. There's been some positive analyst chatter around the restaurants lately, but when I look back over the past several quarters with Bloomin' Brands, I see sales growth, year-over-year sales growth, anywhere from 2% to 5%. And normally I like to see top-line growth stronger than that. So that would kind of be a deal breaker for me, probably a reason why I would never own Bloomin' Brands, because even though price performance wise it looks pretty solid here, and it is a company with potential, I do like to see significant earnings and sales growth in recent quarters. So Bloomin' Brands looking okay. Let's take a look at Panera Bread, because this is a company that has growth that I like to see. Actually, it's growing nicely, showing nice sales growth in recent quarters. Panera, in its latest reported quarter, sales were up 18% from a year ago to $531 million. Earnings up 27%. Full-year profit this year expected to be up 25% from 2011. Panera has been on a roll after a recent breakout over 164. Here was the swing point right here. Some positive comments, not with Panera, but restaurant stocks doing well overall today, because ITG Research made positive comments about Chipotle Mexican Grill, which is starting to work its way higher. You can see its 200-day moving average here at 369. Could be a ceiling for the stock in the near term, but Chipotle up 2.5% today to 344.83. Channel checks done by ITG Research indicate third quarter same-store sales at Chipotle are up about 5.5% to 7.5%. That's currently above the street estimate of 4.9%. So restaurants doing pretty well today. Take a look at some other headline stocks today. How about Jazz Pharmaceuticals, JAZZ. Big move for Jazz today. Favorable court ruling, it appears, for its key drug Xyrem, which is used to treat narcolepsy. Favorable court ruling in a patent case. Shares of Jazz up 14% today to 54.87. And Jazz is one of these drug makers that hugely profitable. Triple-digit sales growth in each of the past two quarters. When the company reported second quarter profit a little while back, sales were up 101% from a year ago to $129.5 million. Earnings were up 33%. So pretty strong fundamentals at Jazz Pharmaceuticals as its key drug Xyrem continues to do well. So good breakout for the stock today over 54.50. That would be a swing point set all the way back here in late April. So that's a look at Jazz Pharmaceuticals. Take a look at WCN Waste Connections. This stock is up 10.5% today to $32.80 on news that it's buying privately held R360 Environmental Solutions for about $1.3 billion in cash. And there's another acquisition earlier today. Iris International up big, about 45% or so, to $19.51. Danaher is going to buy the company for $355 million, $19.50 a share. Coming into today, Iris's market cap was about $235 million. So small company, they make tests to analyze urine and blood. Iris will become part of Danaher's Beckman Coulter Diagnostics unit. Take a look at shares of Apple as well. This is a current holding in the Ultimate Growth Stocks model portfolio. A lot of people thinking about shorting Apple here. A lot of people don't trust its price move. You know, shorting strength is very dangerous. So I'm still content to be long here. I've got a good cushion in the stock, so I can sit through some, a normal pullback at this point. But shares of Apple up another $6.50 today, almost 1% to $697.85. It tried to hit that $700 level, stopped just short. Intraday high of $699.54. But the news around Apple: the company sold 2 million iPhone 5s in the first 24 hours. Of pre-orders. That was more than double what the iPhone 4S did in its first 24 hours. So Apple is going up because of the pent-up demand for the iPhone 5, probably a little stronger than some analysts have been expecting. There have been some raised price targets for Apple in recent days, and it does look like, again, I said this a couple times last week, but it's probably going to be a pretty strong holiday for Apple, not only with iPhone 5 sales, but also an iPad mini is expected to launch sometime before the end of the year, a smaller version of the iPad tablet computer. Take a look at Tesla Motors. That stock was higher at one point. Let's see what it's doing here. Yep, still up near its session high, working on 5 straight gains here. Tesla up $2.11 today, almost 7% to $32.50. Its technical health continues to improve. Morgan Stanley upgraded the car maker today to overweight from underweight. And Tesla is still challenged. They do make a beautiful car. They make electric vehicles. I don't know if I mentioned that, but very nice looking cars. But past 2 quarters, the company has posted declining sales growth. So this is definitely a speculative name. A lot of people love the Tesla cars, but fundamentals still a little bit questionable. Tesla's supposed to turn its first annual profit next year. They're expected to earn 46 cents a share. So profitability not far off for the electric car maker. And stock gets an upgrade from Morgan Stanley today. 877-927-6648. We'll move on, take a look at some other growth names on my radar here. Take a look at GNC Holdings. Really like how trading has tightened up here in recent days. It is really holding above this $40 level pretty well. They're a supplement maker. You see GNC stores all over the place. The stock right now down 11 cents, not too much at all, to $40.12. You have a swing point here of $40.94. This is again what looks to be sort of a cup with handle pattern forming. The high point in the handle area here, $40.94. The one thing I don't like about GNC, and it's probably going to keep me out of the stock unless it's a super powerful breakout, and I'm never going to say never, but the one thing I don't like about GNC is the fact that it tends to trade all over the place. And that is something I pay attention to when I'm, I don't mind some volatility, but when you get these, crazy intraday price swings, it's just really tough to handle a stock like that. And I'm talking about a day here. This was back on July 26th late July. It hits an intraday high around 41, an intraday low of 34.50. So, I mean, you're just talking these gut-wrenching price swings. And, listen, a breakout isn't out of the question here. Fundamentals are still pretty decent at GNC Holdings, a company showing good top-line growth. And, they're definitely, arguably, best of breed in the nutrition store space. But, its trading in July and August was very, very harrowing. But it's starting to show signs that it's settling down here. So you got to pay attention to constructive price action like this. If you do get renewed signs of accumulation in the stock and a heavy volume breakout over 40.94, would be a base breakout during a market uptrend, probably worth a nibble here. Or if it is able to break out successfully. Data warehousing firm Teradata, TDC, starting to firm up a little bit, holding above its 50-day moving average here, and it's outperforming nicely today, up 1.1% to 76.06. And I think I have a weekly chart here. That's the daily chart. Take a look at Teradata here. There's the weekly, and you'll see this is just a good example of stock that breaks out, comes down to its 10-week moving average. Looks like it's finding support. There was some distribution in the stock last week, which is worth paying attention to. We talked to Gary in Colorado Springs earlier in the show about RealPage, a stock that also saw some distribution last week, specifically on Friday. But with Teradata, you did have a weekly decline here and quite a bit of volume in the stock. So it is holding its 10-week moving average so far. I'm not a buyer here either until I see renewed signs of accumulation in Teradata. Akamai, another interesting name here. Still seeing a lot of stocks out there. This is like the one thing I still like about this market. I don't want to be overly bullish here because we have come a long way in a short amount of time, and I'm open to the possibility that we could come in and correct in price a little bit. But so many stocks out there like Akamai that are just holding gains, holding near highs, really showing relative price strength. And Akamai today is down 25 cents to 38.78. I'm going to take a look at a weekly chart here, and fundamentals for Akamai are pretty good because you do have sales growth accelerating in recent quarters, which typically indicates strengthening demand for a company's products. Akamai Technologies, well, its technology basically speeds up delivery of content over the internet, but you can see a weekly chart here. Stock could still be in the early stages of a move. Hasn't technically broken out yet, but it could. So this is another one to watch for a potential breakout. Now, what have I been saying in recent shows? The market has been moving basically since early August, and there were a lot of growth stocks that have been moving for some time now. So on the one hand, you want to be a little wary of stocks that are breaking out of fresh bases right now. Some of them will still work. I remember, Panera Bread, a recent new initiation in the Ultimate Growth Stocks model portfolio. It broke out not that long ago, but the big leaders tend to make their presence felt early in a market rally. So I think by and large, most of the leadership stocks have already been established. A lot of them have moved. They're extended in price, too late to buy now. But a lot of these names are going to come down to their 10-week moving averages and find support, and that's just kind of a pause in the middle of a strong uptrend. So you want to pay attention to those stocks that could pull back to the 10-week moving average and find support. That said, a name like Akamai on the verge of a breakout here could still work, so it's worth eyeing for a possible breakout here. Taking a look at Broadsoft, BSFT. This is a kind of a little-known company here. They make a communication platform for telecom services providers. Nice article in IBD last week on Broadsoft, but in the process of breaking out here, up 5.4% to 42.44. Take a look at its weekly chart here. Broadsoft, there it is. Gives you a different perspective, but what you have here is a nice little cup with handle pattern. Buy point of 40.64. Currently trading around 42.39, so a nice little technical setup here for Broadsoft. And looks pretty good. Looks pretty good. All right, folks, coming back for after our final break of the day. We'll check in on the major averages one more time, and we'll do that in about 4 minutes. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing. One of these emerging leaders that hopefully is going to keep going. But if the market does come in here, LinkedIn would be an example of a stock that could pull back to its 10-week moving average here around $110 a share, and at $121 a share right now, it would be, almost a normal pullback. Preferably, I'd like to see it just kind of move sideways here and not give up many gains. But if we do get a sharp sell-off in the market, a name like LinkedIn could come down to its 10-week moving average at 110. But I would expect that would be a pretty good support level for the stock. So at this point, I'm looking at weekly charts of stocks that have broken out. And for maybe there's another name or two that I want to add to the Ultimate Growth Stocks model portfolio, but I'm not going to do it until I get a pullback. If I missed a breakout, I'll wait and see if that stock pulls back successfully to its 10-week moving average. There are plenty of successful breakouts there over the past several weeks where I can't buy every single breakout out there for the model portfolio, but if there are some stocks that I want to own that I missed, I'll wait for them. I'll wait for the next market pullback and see which ones find support at the 10-week moving average. So LinkedIn is another breakout that's acting perfectly fine here. Stock's underperforming a little bit today, down 1.4% to 121.55, but still holding above a swing point here of 113, and the last swing point above that was about $120 a share right here, and it's still holding above that point too. So we'll see what the future holds for LinkedIn, but another fundamentally strong company that's got good technical picture to boot. Let's take a look at shares of Gilead Sciences, GILD, yet another strong performer in the market here. It is extended in price. You don't want to chase this one. Earlier today, JP Morgan raised its price target to $75 from $70. JP Morgan cited the company's new HIV medication Shreve and also its hepatitis C drug pipeline. So I have a weekly chart here for Gilead Sciences. Let's check out that. There's Gilead. We'll see the weekly chart here. Again, this is what an extended stock looks like, but if you want to own Gilead, next market pullback, you could easily get a pullback down here to the 58 level. Would not be a broken stock at all. In fact, would be healthy at this point. Wouldn't chase it up around $65 a share, but this is another name that I think there's a good chance if it does come in down to its 10-week moving average at 58, it should be able to find support there. If it doesn't, and a lot of these leading stocks break through their 10-week moving averages, that means that the market pullback could be a little more extreme than what I'm anticipating right now. But Gilead's breakouts first over 54.75. Right here, that's that swing point, and then a breakout over 58.84, which really probably would have been a secondary buy point. Maybe you would have bought a smaller amount right here, but any way you look at it, it is an extended stock right now. Okay, let's talk about some earnings reports this week as we head into the break. Tomorrow, going to be keeping an eye on FedEx. What FedEx says about the economy is important. This company did have an earnings warning on September 5th, citing slack worldwide demand. FedEx was under pressure Friday. It's under more pressure today ahead of its earnings report tomorrow before the open, down another 1% to 89.29. So we'll see what FedEx has to say tomorrow. Also, Manchester United, recent IPO. They're going to be coming out with earnings tomorrow. On Wednesday, watch for earnings from Adobe Systems and Bed Bath & Beyond. And then Thursday, Oracle and Tibco Software. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. Thanks very much for tuning in, folks. Always a pleasure. I'll be back tomorrow, same time, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon.